My automated futures trading bot caught this first win on today, June 2nd, for a $500 win, though it broke even on the day because the next trade was a stop. But here are the trades it made, why they work, and what could have been done a little bit better to make more money. The idea is I take the highs and lows of the first 10 minutes, so we take this low level right here, first 10 minutes of trading, 8:30 Chicago time. We don't include this level because this was after the first 10 minutes. And then we have our high, which is this other line that I drew right here. I don't trade off the first touch because, I mean, it would have bounced a little bit and hit the moving average, would have made a little bit of money, but sometimes it blows right through those opening ranges, so I like to sit that first one out. You can see it goes above, and then right here it starts coming back down to this level, and my bot enters about 40 ticks below it. I like to give myself a little bit more cushion because, as you can see, it came down quite a bit right here. I mean, I set a stop loss of about 500 bucks. It would have been close, but we entered a little bit beyond it, and then it eventually turns around, and I cash out at this 14 period moving average right here. Makes me about 500 bucks, and give or take, might have been a little more. You can see I could have held it longer, and it went way up, and that would have been upwards of $2,000 profit on one NASDAQ futures contract, NQ. I like to cash out. If you see my other videos, you know, sometimes it turns around at the moving average, and then you can go from a $500 win to a $500 loss pretty quickly. This wasn't the case here. If you're trading this on your own, you can always trail the stop. So once you get up here to the moving average, set your stop loss at either break even or a slight profit. So if it was to turn around, you know, you'd still cash out and make some money. And then as it just continues to rise, you can move the stop loss more and more and protect to the downside. I like to just cash out when I was up over $500, especially after being down a little bit. Didn't want it to turn around. I was happy with that win. I did want to see another win on the day. Did not happen, and I'll show you this next trade right here. Did not enter right here. Moving average was too close, and it was kind of just hovering at this level, and my bot would have entered beyond it. Didn't get beyond it. It's trading sideways around there, which gets me a little nervous. Finally, we did break significantly above this level, and we came back down, and my bot did enter long, and you can see, unfortunately, stop loss. We lost about $500. I could have gotten out at the moving average here, but I was down a little bit. I really thought it was going to break out and revert. You can see right here we were setting higher lows, and I thought it was going to blast off and then cash out up here for another win. Did not happen, and then, of course, it ended up going way up after I already hit my stop loss. It just barely got stopped out. I set it at $500. I don't want the trades to get too far away from me. You could do $1,000 if you're trading on your own. If you have a higher risk tolerance, then, you know, you could have let it run a little bit longer. It only went down another like 100-ish, $150 maybe from that 500. So if I had a $700 stop, it wouldn't have gotten stopped. It would have made me money, but the thesis was right. It did revert slightly beyond that level. I just had my stop loss a little too tight, which I stand by it. Sometimes the trades don't work out. You don't want to blow the account, have it get too far away from you. And now if you're wondering where I got this level from, if I zoom out a little bit for you, you can see the first 10 minutes of trading right here obviously didn't get up there. Why do I have a level up here? The idea is that it's equidistant between the initial low and the initial high, and that there's basically this grid of support and resistance levels going above and below. Usually the additional support and resistance levels are going to have the same distance. So if we set this level right here, there's another one the exact same points higher. So we had about 450 to 570, so about 120 points. You can see another 120 points about to the upside is where we get this level from. Like I said, this trade would have worked out if we held it a little bit longer, but did not. We set the stop loss a little bit tight because I didn't want to get too far away from me. Additionally, like I said earlier, you could have let this trade ride up to this next level. So if you really wanted to let the winners run, you could set a profit target slightly below that next level up there, because it didn't get too far above it and it turned down. You could have shorted it right here, made some money. My bot didn't, like I said, the moving average was very close, didn't really give me a whole lot of cushion, and it was kind of trading sideways around the level. Makes me a little bit unsure of it, so that's why I avoided that trade. But the general idea was right, both trades, just one of them broke even. Well, one of them lost money, one of them made money for a net break even on the day, but the thesis was correct, and it is still a strong strategy. And you still can't be too mad with a break even day, better than losing money.